time we answer a question on your stock in a little segment we like to call Your Stock, Our Take. Buy, sell, or hold.
Nvidia Corporation been in the news a lot over the last week. It is trading under the symbol NVDA on the NASDAQ, $390 share price, almost $1 trillion market cap. And what they do is they're the world's top designer of high-end graphic processing units, or GPUs. And these are used in markets like AI systems, data centers, high-end PCs for gaming, and then also automotive systems. So last week, the company put out their Q1 financial results and the stock went wild. So far, it is up 27%. It was topping the news headlines in the stock market as well. A lot of talk about this potentially being a new leg of growth for artificial intelligence companies. And then also a lot of talk on the other side saying that this symbolizes a bubble in AI. But what makes this more impressive is that it wasn't just last week. The company's share price had doubled before last week since the start of the year. So it's now up 175%. So what is driving this incredible stock performance from Nvidia? Well, they did put out their Q1 results, and the Q1 results were pretty good, at least on a quarter-over-quarter basis. On a quarter-over-quarter compared to the fourth quarter of last year, revenue up 19%, earnings per share non-GAAP up 24%. But year over year, all the metrics were actually down. Revenue was down 13%, gross margins were down 0.3 points, and earnings per share were down 20%. So while these numbers look good from a potential recovery perspective, I don't know if they quite indicate why the company has had such a run over the last week. But really, it comes down to not what the company is doing in the current quarter, but rather where the market sees the company going in the future. And what the market has determined is that Nvidia is the current AI revolution stock. It is a favorite in this space right now. This makes a lot of sense. When we think about AI companies, most of the attention usually goes to software companies. I mean, you have OpenAI, not public, but they have software that is being brought to the consumer market by Microsoft, which of course is public. Many other software companies. We talked about Snowflake, which is another company that is in AI. But Nvidia really, they're a hardware company. So what they do is they build these high-end graphic processing units. And this is really the backbone infrastructure of advanced AI systems. So GPUs historically were used mostly in gaming. They were also used in mining Bitcoin. So there was a bit of a boom during the Bitcoin craze. But recently, they've been used a lot in AI because AI systems require a lot of computation and GPUs are really fast. So this is where Nvidia is getting their growth from. And this is why there's so much excitement around the stock right now. Just recently, the company attended a conference in Taiwan. The CEO did a 2-hour presentation on what the opportunities are and really laid out the groundwork for the company's future growth. And I just grabbed a couple of the highlights from this presentation, as well as from the company's Q1 conference call. One of the things, of course, new products, new services. They've announced an array of new products. This includes new robotic systems, more gaming capabilities, and also AI powered systems as well. They've also announced an AI supercomputer platform. So they're launching a supercomputer platform that is going to aid tech companies in developing new AI programs similar to ChatGPT. They talked about their evolution, how in the past, NVIDIA has really been more of a computer graphics chips manufacturer. Now it is focused on the AI revolution. One of the things that really impressed the market was that the company's Q2 forecast was well beyond analyst estimates. And this is driven by demand for AI data center chips. I'm looking at the data center operations. This is another area of huge growth for the company. So they have technology which is transforming data center. And this was really evident in their financial results with data center revenue at a record of over $4 billion. And they've also announced a lot of new partnerships as well. So they're partnering with companies across different industries to build AI infrastructure. And this includes healthcare, finance, advertising, just to name a few. So really, the market is looking forward here at a company that is growing in the AI space. Now, I pulled up some analyst estimates on the company just to see where the valuation and the growth is sitting. Of course, we're always going to take these with a grain of salt. We're not going to put too much credibility in them, but based on what the expectations are from the company, they don't seem to be too far off. So last year, the company reported about 334 in earnings per share, and analysts are expecting that to more than double in the current year to about 733. So if we look at this company on a trailing basis, it's trading at over 100 times earnings, right? So that's obviously a very expensive valuation if you are at all a value or a price sensitive investor. But if you're looking at current year earnings, that valuation drops down to about the 50 to 55 times earnings. And then analysts are estimating 980 in earnings next year. So that would drop down to about 40 times earnings. So a lot of growth expectations right now for the company, certainly at a premium valuation. But if they're able to hit these targets, the valuation starts to look more attractive. So our take on Nvidia right now, we love the strong leadership position in the GPU market. So they actually, if you look at just GPU market share, Intel still controls the lion's share of the market share. But where Nvidia really shines is in the high performance GPUs. And these are the GPUs that are used, as I said, in AI systems. They're used in data centers, autonomous driving. So all of these huge growth areas, Nvidia is present and a leader. They're really at the forefront right now of the AI race, but from a different perspective than what we're used to. Less focus on the software, more on the hardware, on the infrastructure that supports AI. So this is rapidly growing. Overall, the fundamentals are impressive. The company is profitable, has a history of growth. Just the valuation, of course, that's a premium valuation that we have on the stock, certainly on a historical basis. Now, if we're looking forward 40 times next year's earnings, assuming that the company is going to continue to grow, which you can't make that assumption necessarily, the valuation looks not so bad. It's certainly still a premium, but it is not an outrageously high valuation for a growth stock in an attractive market. But one thing to really keep in mind about Nvidia is that historically, the company does have a history of cyclical fluctuations in market demand, and this impacts the financials. So unlike a lot of software as a service, SaaS companies, it's not necessarily going to be that consistent year-over-year growth trend. There's booms and busts in its market. Maybe this changes in the AI space, maybe it doesn't, but that's certainly something to take into account. So our advice, it's not a recommendation right now, but we like the company, we like the positioning. In terms of if somebody were going to buy it, I'd say, if you want access to the space, you could chip away at it slowly over time, but you'd want to take a longer term time horizon, 5+ years. It's already had a big move up in the near term. And as I said, there are cyclical fluctuations in demand. So once we see some weakness in the earnings, it may give the stock price, will likely give some of that value back.
Yeah, I think what you touch on in the end there is the cyclical nature of the business, and the this isn't a SaaS-based business. It is it's not a massive recurring business model. So you're paying a premium and for a high quality business, but do you have it's going to be volatile is what I would say, and it continues to be a company that can really react to on a quarterly basis to the earnings as they are released. So it's something to factor into your investment in the company. Just know that there is going to be a high degree of volatility in the business.
Yeah. And Brett's our resident semiconductor chip expert. So what say you?
Yeah, so I would agree with him. Overall, it's, in my opinion, it's priced to perfection, I would say, at the current time. Because right now, they, like Aaron said, they effectively have a monopoly in the data center for discrete GPUs. And as well, when Aaron was saying before, Intel holds for graphics for consumer. That's somewhat, there's kind of two sectors. So there's integrated graphics, which Intel has, because it's in their CPU. But when you go to discrete graphics, it's split more between Nvidia, and then AMD and Intel is just starting to get into that space, but Nvidia still holds a lion's share in that. So right now you're seeing their gaming sector, which was the previous craze, especially with the crypto last year, they were including in that. And that is where their cyclicality comes in. We've seen that drop off for the past year. So their highest revenue was about, and still is, but most likely won't be next quarter, was about $8 billion in revenue. And that was Q1 last year. That was off the back really of these crypto sales for Ethereum mining, which is completely gone now. So we've seen that. And I think we could end up seeing something similar with AI. I think it has more legs in the long run. But let's say we see a bunch, and I think this is the case, is we're seeing a bunch of companies who are just panicking to get into AI, and they're heavily investing up front. So we could end up seeing these sales drop a year down the line. I don't think it's going to drop off like it did Ethereum, because that was just completely eliminated. But I think we could end up seeing, if AI doesn't produce returns, especially in the 1 to 2 years, we start to see Nvidia's sales end up dropping because of that, because they're not going to have continuous capex by these companies if they're not getting some sort of return. Like you covered last week, Zoom, they're doing AI. If they were investing whatever 15, 20 million, I don't even know what it was, and that would be 30 to 40, I think, of their DGX units now. And that'd be the company they're kind of aiming at, where it's not a full-on AI company, but it's a company that wants to do AI. That would be like a Zoom type of company. If they don't get returns, so if Zoom doesn't get returns, why would they keep investing in it? It doesn't make sense. So when you're getting all these companies, in every single call I'm just searching Control F, which is the search function for Windows, and searching AI, you'll see normally a dozen references to AI in these sorts of companies. I think a lot of shareholders are pressuring companies which could have interest in AI and profit from it in some degree, but they're really being pressured right now, and I think it's front-loaded Nvidia's sales. So if it doesn't continue, and you're going to see people saying AI is a definitive future, but right now it's a tool at best. It's not set in stone, and you're seeing really, we know it is a thing, but it is not guaranteed like some people are saying, and you're seeing that investment come into these companies like it is for sure 100% happening. It's going to improve profitability for those companies.
That's a really good point. I think that there's always a tendency to overbuild, right? Mm-hmm. Like when you have a theme like this, and the more correct the theme is, I mean, there's no doubt that AI is going to be an integral part of our future. But when you have everybody rushing and racing to try and build as much as they can, a lot of time not really even understanding it or having time to like properly assess the benefits, especially
they don't seem to be as price sensitive.
Exactly.
In a competitive market where everybody else is doing the same thing, that's also going to push the prices up for these. So there is a tendency to overbuild, and we see that. I mean, I remember watching a documentary on the industrialization of the United States. That's what happened with the railroads. Like, of course, railroads were an absolutely critical part of infrastructure back then, but because they were so critical, they were overbuilt, and then there was basically a bubble and a bust in it. So
yeah, I think you
not
can really,
railroads and AI are the same thing, but I mean, it's still understanding the history of it. It's the tendency.
Yeah, and not that cannabis is the same thing, but look at the overbuild there,
mm-hmm.
right?
Like, exactly.
With majorly hyped. I'm fairly certain that AI will be more impactful to the human race than cannabis going forward, although Brennan might disagree.
Just kidding. No.
But yeah, but there's in anything. I mean, we saw it in 3D printing, for God's sake, in the market, right? Where there was just a few 3D printing stocks, like it was going to be the next greatest thing, and then the business becomes commoditized, and just people don't completely understand it. They overhype it and put too much into it.
I think the best. The two comparisons I've been seeing made is either Nvidia's iPhone moment, or it's like Cisco in the .com bubble. And I would honestly lean at this time more as a Cisco moment, which it is still a good company. It has lasted through all these years, even after the boom in 2000. They were supplying routers and equipment for
hardware gear.
Yeah, hardware gear for the initial infrastructure of internet. And I think we're seeing that with AI now versus the iPhone moment, which people are saying, oh, they're creating a new market. It's this new product. But Apple is trading at significantly less of a premium at that point. Let's which
I
is
think it
the
was
issue with
trading
Jeff.
at the start at under 15 times
Yeah.
actual earnings.
15
like
times
in that
actual
range.
earnings
So you're
versus-
talking about, a complete, and it never got to, it was never trading at 25 times, 40, 50 times sales.
Exactly. And that's why I'm leaning towards the Cisco moment. And the company overall over the last 20 years, it still hasn't hit that all-time high again. I don't think we're going to see that degree with Nvidia, but I think we are going to see a lot of volatility, and you could potentially have in the next year where you have another double of the stock, but then it comes cratering down. And if you're that big holder who buys at $600 or $800, if that does occur, you're probably going to be holding for quite a few years, I think.